Hey everyone, welcome back. And do apologize for the slight delay. And let me know if there's any issues with audio. I'm assuming everything is coming through okay, so we are going to get started. Okay, so this is going to be the third session for our news trading, and this is obviously going to be the CPI numbers. And one that's actually very long awaited by a lot of traders this month, and we'll cover some of the basics first as we go through, and also what kind of expectations we're looking out for. So let's get this started. Okay, my name is Peter Njero. Let's get this started with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. And that would be something that's going to be very true for tonight as well. Be attentive when determining the volume of your transactions and consider all possible risk factors. All right. Just a little bit about myself, if you guys are new here. My name is Njero, and I've been a full-time trader with over 20 years of experience, professional trading coach and technical analyst since 2007. I'm also an expert in the Ishimoku Kinko Hyo techniques, and I do run my own independent market consulting company as well, and also been invited as guest speaker at the Trading Investing Expo across Australia, InvestFair in Singapore, as well as the ATAA and the APTA conferences, which is the Australian Technical Analysts Association conferences. All right. Okay, as per usual, you're going to get your bonus for participating in this session, and that's going to be a promo code to double your deposit bonus. So that's a 100% deposit bonus to double your deposit, and obviously to maximize your profit potential. I'll be sharing that code in a minute. And if you register through email, you should already have access to the private Telegram channel via email. So if you have attended previous sessions, then you should already be in that Telegram channel. All right. This is a code that you can use. It's non-farm 2024. So make sure you are using this code when depositing into your Octa trading accounts. This is going to be valid until the 31st of December 2024. You can actually write it down and save it whenever you need it. Okay. Okay. Let's cover several stuff. Obviously, we're going to go through some of the theory. I'll go through as fast as we can because I do want to talk about what we anticipate from the market tonight. And obviously, we need to talk about what inflation is, right? So inflation is the rate at which prices for goods and services rise. Okay, the word here is rise because I don't think I've ever seen inflation decreases significantly over a period of time. In fact, we kind of keep getting inflationary growth over time. Right, so the most commonly used index obviously is the CPI, and we also take a look at the core inflation. Yesterday, we already have the release of the PPI, and if you guys are wondering what they are, this is kind of a little bit of a breakdown into the difference between the two. So focus for tonight is the CPI. This is a consumer price index, and this is obviously a critical indicator of pricing pressures in an economy. It provides a gauge of inflation. Forex traders monitor the CPI because it can lead to changes in monetary policy conducted by the central bank, which can either strengthen or weaken the currency against rivals in the market. Now, CPI, as we can see here, this is the pricing pressures in an economy. As the inflation goes up, obviously cost of products goes up with it as well. So if we have an inflation that's kind of slowing down, then we do expect changes from the central banks to kind of cut interest rates or maybe not to hike interest rate. But if it continues to push up, obviously there's going to be a need for a central bank to kind of tighten the monetary policy. And I just give you a little bit of an update into the latest comment from Jerome Powell, which is the FOMC president. So FOMC chairman, right? Or what do I say, president? ECB president, yeah. Okay. So yeah, we do have the latest comment overnight, and what he was saying is, they're not too concerned yet about inflation. Should it go up, they're still not taking the path of interest rate hike, i.e., they might do other tightenings, but that's not the same as an interest rate hike. So we're not looking at the worst case scenario that could happen, which is an interest rate hike, should inflation continue to pick up. All right. So tonight's CPI, yesterday was PPI, and we did get a little bit of an insight into the potential inflation number here. So let's take a look at a little bit of a breakdown between the two of them. So the CPI measures the cost of living, and it does include broad range of goods and services which is purchased by consumer. And if you don't know, rental prices is actually part of this as well. Services costs are also part of the CPI as well. It will also include international personal consumption items. So if you you kind of import something from an online store, for example, if you're not in the US and you bought something from Amazon US, if you are in the US and you bought something from, other online stores which is not in the US, then it's actually going to be included into the personal consumption personal consumption items as well. All right, the scope excludes changes in interest rate or cost. Now, if we take a look at the PPI, the CPI is the consumer side of things. That's basically how much they pay for, their basic necessities and the stuff that they buy to consume, right? So the PPI is kind of the opposite. The PPI is the producer's price index. It basically measures, whether or not the cost to produce something goes up with it as well. And it measures real growth in output, and it does include items produced for personal consumption. It does not include imports, encompasses services with prices, including an interest rate component. Now, to give you a little bit of a breakdown here, obviously these two are going to be related, right? But the CPI, the Consumer Price Index, is basically the main focus for a lot of traders. That's why we don't actually see a lot of movement last night from the PPI numbers. And the PPI last night, we actually did a live session, but not in English. We did that in Bahasa Indonesia. And with the PPI last night, the initial reaction that we saw was it was a stronger inflation number, right? The PPI actually went up in terms of the PPI monthly growth. It does went up. However, the previous month's number was actually revised down. So with the downward revision last month and the data that was just released overnight, it kind of balances out itself, right? Because if we take a look at the measure, if we measure the number of revision, the percentage of revision that was done to the previous number versus the one that's actually released last night, it kind of balances out, right? It's about 0.3% in either direction. So it's practically flat at this point in time. However, we do note there's actually a little bit of a growth in terms of the PPI. Now, obviously, could that be implied to the data released today? It does give us a little bit of a warning that the CPI could see a little bit of a revision to the downside as well. Okay. All right. The next thing is going to be the core inflation. So the core CPI, right? It's going to be referring to the change in prices of the goods and services, excluding those from the food and energy sectors. And obviously these items are excluded from this measure of inflation because their prices tend to be more volatile. Because if you take a look at the food that's excluded, it's going to be fresh produce. And in terms of energy sectors, most of the stuff that's taken out is pretty much the petrol prices or gas prices, right? These items, obviously, if we take a look at the fresh foods sector, it is seasonal, right? Sometimes there's going to be a lot of these products, sometimes it doesn't. So it does cause a lot of volatility in the market. And also energy sectors, they're excluded because it does create a lot of volatility. Price for these energy sectors are typically more volatile. It could actually impact the reading of the inflation itself. So they are excluded for that reason. Okay. So core inflation is determining using the consumer price index. So what we do here is we take a look at the CPI and we take out a lot of the stuff here. So the CPI is the total index, right? But being an index, there's going to be a breakdown of component lists into the CPI. So some of these are taken out to measure the core CPI. All right. All right. So I think we have time. So I'm going to spend about 10 minutes talking about this. Just grab a quick drink. So something else is tagging along tonight, right? We're not just looking at inflation number. Retail sales is actually going to be released at the same time as well. So yeah, it does create a little bit of a, I wouldn't say a problem, but it does kind of increase our risk for tonight's news trading as well. Because if the inflation number comes in hot, for example, higher than what the market consensus, then the retail sales number drop, it could have a little bit of an impact as well. So I do expect a little bit of a whipsaw to happen tonight. So let's take a look at the numbers tonight. I want to focus on the inflation rate year on year. Previous number was actually at 3.5%, and the forecast is at 3.4%. Now, if we take a look at the consensus and the forecast here, it ranges between 3.4 to 3.5%. And if you haven't seen the outlook this week, I already mentioned that, if we get something that's as per consensus, it still means a very high inflation in the US, right? It doesn't have to go down for the inflation trajectory to continue to go up. Okay, so I think a lot of the focus for tonight is going to be on the monthly number, and that would be what we are going to be focusing as well tonight. All right, so let's take a look at the inflation rate first. Last month's number was at 3.5%. We're looking at 3.4%. So if it does come in as per consensus, that could actually still mean a stronger US dollar. So just keep that in mind, because the inflation is still going to be high, and the FOMC might not have to act in terms of adjusting their interest rate policy at this point in time. The only couple of surprises that we have here, we might actually have two surprises. Number one, if we have the March inflation number, which is at 3.5%, revised down to a number that's actually lower than 3.3%, that could actually be a weaker US dollar. And especially if the consensus came out with a surprising drop below 3.2%. So that could mean an instant weakness for the US dollar. So just keep an eye out if we get that kind of results. Okay. Now, the other thing is the monthly growth rate. It's currently remaining flat at 0.4%. It's not flat. It means like last month it grows by 0.4%. This month we're expecting it to grow by 0.4% and so forth, right? So if we get the growth rate still above 0.3%, that's still going to mean very high inflation. The only thing that could have a negative impact onto the US dollar is that if we have the monthly growth rate at 0.1% or maybe at 0%, that would weaken the US dollar. Okay, so just keep that in mind. Core inflation, we're expecting this to drop down. That's completely fine. 3.8% to 3.6 or 3.7%. That's still going to be within the realms of acceptability at this point in time. We're not too focused on the core inflation at this point in time. A drop in the core inflation, if it's a huge drop, then yeah, it will be helpful for the global economy, because we're going to be expecting the FOMC to start cutting interest rates. But at this point in time, as I mentioned the outlook earlier this week, it is still a very high inflation number at this point in time. Okay, so inflation number, definitely want to focus on the year-on-year number, which is the headline inflation. Let's see if it drops down below 3.2%, or is it going to pick up again? Okay, if we get a number that's higher than 3.5%, or maybe even at 3.5%, that's going to send the US dollar stronger. So just keep an eye out on this one. Again, the main focus for us is going to be the monthly number. This is going to be what's driving it. It's not going to be the headline inflation number. Now, retail sales tagging along, obviously. We got 0.7% growth the previous month. If we see the growth rate of this retail sales number drop, currently it's expected to come in at 0.4%. Any significant drop below 0.4%, for example, a 0.3%, then yeah, it could actually weaken the US dollar. However, if we get a surprise growth, anything above 0.6% at this point in time, or very close to 0.7%, that would be a surprise, a positive surprise for the US dollar. Okay, cool. We good with this? Everyone kind of in the same page? I'm not expecting anything majorly different to what the consensus and the forecast is. We're still looking at this. However, if we take a look at the previous month trajectory, obviously we saw that inflation rate has continued to increase again. Obviously, at the beginning of this year, it was 3.1% in January. February number was 3.2. March number was 3.5. April number, we're expecting a 3.4. So, if this continues to go up, that's going to be problematic for the FOMC to start cutting interest rates. And the concern that we have here as an analyst and as a trader is that if inflation shoots back up above 4%, that would actually be a very strong signal to the market that the FOMC might need to start hiking interest rate. All right. wait, hold on a second. Okay, so yeah, that's the headline inflation number, and this is the monthly growth rate. And if we take a look at the monthly growth rate, it is actually pretty constant. We are looking at an average of about 0.3% growth, 0.3% growth in terms of the monthly growth rate. Okay, so if we get a number at 0.3, 0.4%, that's not going to create a negative impact onto the US dollar. However, if we get a drop to 0.1 or maybe a 0% growth, that's going to be a significant impact. Now, if we take a look at last year's May number, obviously that's going to be next month's release. We did saw a little bit of a huge drop from 0.4% to 0.1%. But again, the main focus for tonight is we want to see the growth rate, right? We want to see what we want to see is whether or not the growth rate drops significantly. If it doesn't drop significantly, and that's mentioned in the weekly market outlook, it still means an upward trajectory on the US inflation. So just keep that in mind, okay? And if we take a look at the previous releases, so let me just go back to the headline inflation first. Previous releases, we were expecting a little bit of a lower side. We got 3.2, we were expecting 3.4, we got 3.5. Monthly growth, it's pretty much stable. About 0.4%, back and forth between 0% to 0.3%, but we have a constant 0.4% growth on the monthly rate of change. Now, the core CPI, for this one to go down or at least remain stable, that's kind of still is the view at this point in time. We're not expecting a sudden drop or increase on the core CPI, because if we take a look at the previous month's core CPI, it has gone down by about 0.1% every single month. So we're looking at a little bit of a steady drop to the downside for the core CPI. Okay. All right. So let's go to the chart, and let me show you a few things before we set up our trades, obviously. And is it a buy or sell or gold? We don't know. At this point in time, we're just waiting for the data to be released, and we're trying to create a little bit of a barrier. Obviously, if you missed out on the theories, we are still going to be doing that next month, so just keep an eye out on that one. All right, we'll start with the pound USD first, and we're going to go on to the 50-minute time frame. We do see a little bit of a range that we can kind of establish ourselves into. There are a couple of things to watch out for. You can do the 1 hourly time frame range if you want to, but I think for tonight we're going to be sticking with the 50-minute time frame, and we want to create a buy stop above 1.2625. I want to adjust this a little bit higher to about 1.2630. We still have a little bit of a room to go there, and in terms of the sell stop for this one, definitely below 1.26. And you do want to have it a little bit lower, maybe about 1.2595. Okay, you can push it below that level. You can do it at 1.2585 if you want to, but for tonight, if we're looking at a 50-minute time frame, I think about 1.2595, it's a good enough level for the straddle. Range wise, I don't think this is actually that bad. It is only about 34 pips, 35 pips from the buy stop and the sell stop. Still a reasonable range at this point in time. All right, Euro USD is up next. This one here is a little bit dangerous because if we take a look at this one, we don't actually have a strong established range, right? If we take a look at the hourly time frame, the Euro USD has been pushing up a little bit higher. Again, we still do see resistance at the current price level for the Euro USD, and definitely we are going to create a little bit of a buy stop here, a little bit higher, 1.0840, and in terms of the sell stop, we do want to have it a little bit lower, maybe about 1.0815, right? Just to give it a little bit of a range for the market to move. The range has been pretty small. If we measure the range itself, it's only about 25 pips, which is a smaller range than the pound USD. All right, so that's that, the Euro USD and the pound USD. The dollar Japanese yen, I will skip the dollar Japanese yen. This one here is a little bit tricky to trade. We will not be trading the dollar Japanese yen for tonight, and also we don't have the corridor of volatility. We cannot place our buy stop and sell stop order anyways. Okay, next is the Aussie USD. If we take a look at the hourly time frame, we can create a little bit of a range for ourselves, but only on the hourly time frame. You do have the buy stop above 66.50, so about just around 66.50 if you want to, and the sell stop it's going to be below 66.20, and ideally you would want to have it about 66.18, just right around there, or if you want to have it a little bit safer, around 66.15. Okay, this range, this is on the early time frame. Obviously, if you look at it, it looks huge, but it's not. It's only about 37 pips in terms of range. Now, if you go into the 15 minutes time frame, we're not able to create that smaller range for the Aussie USD. So just keep that in mind. New Zealand USD, the same thing as well. So I'll just skip New Zealand USD. The dollar Swiss, we cannot create that corridor of volatility. Unfortunately, the market has already started moving. We'll take a look at this after the data has been released. The dollar Canadian is also a little bit tricky. You can create the sell stop if you want to, just below 1.3625. And in terms of the buy stop, you can have it a little bit higher at about 1.3640 or 45. That would be the kind of the established range for the dollar Canadian. So dollar Canadian, pound USD, the euro USD, these three we can establish our range, as well as the Aussie USD. New Zealand USD will be very similar to the Aussie USD, so I would say choose one. Data is also going to get released anytime soon, and let me just be on standby and see what happens. All right, yeah, just any minute now. It's about 1 minute to go there. Okay. For gold, be a little bit more careful. The range is huge, so yeah, just be mindful of that. Okay, so data's going to get released. We're sticking with 4 trades for tonight, which is the euro, pound, Aussie USD, and the dollar Canadian. That would be more than enough. So let's see what happens. Again, if one of the order get triggered, you need to cancel the other order. Just waiting for the numbers to be released anytime soon. Again, retail sales is here, so it could actually impact the inflation number if the retail sales kind of miss consensus by a lot as well. All right. Yeah, market's getting fidgety. We still don't have a number. Do we have? Yeah. Okay. We got orders on the euro USD, pound USD, dollar Canadian got triggered. So buy, sell. So yeah, I'll close the dollar Canadian. I think it's red. I haven't looked at it, but I'm pretty sure it's red. And right. Okay, core inflation rate growth, monthly growth is at 0.3%. Retail sales is at 0%, so I think that's negative. All right, so this is already up and running. I'm just waiting for the reading on the headline inflation. Why is it not coming out? Okay, headline inflation is at 3.4% as per consensus, but the monthly growth kind of dipped down a little bit, so that's okay. I think the driving force for now that impacts the dollar negatively is the retail sales. Revised down from 0.6% to just 0% growth. Okay, so this is pretty much one directional. All right. So again, our trades for this one here is going to be quick and short. So if you're happy with the results, feel free to get out. I don't think this is a number that we should actually be happy about, because the inflation rate, the headline inflation rate, remains at 3.4%. Core inflation, as per consensus, at 3.6%. The inflation rate, monthly growth rate, it's not a huge drop. Market is expecting 0.4%. We got 0.3%. It's not a huge drop at this point in time. Sure, it'll kind of breathe a little bit of life at least onto the euro USD and the pound USD. We are long past the resistances on this anyway, so yeah, I think this should be okay. The Aussie USD, I don't have an issue. For Aussie USD, in terms of take profit level, we are going to be looking at potentially around 67. The euro USD, if we are measuring this, we actually do approach a little bit of resistance. The max you can go here is probably about 1.09. I wouldn't even count 1.09 at this point in time. Maybe about 1.0880, 85. That's pretty much about it. You are likely going to have a little bit of resistance about 1.0875. So maybe I think that should be a good time to get out as well. In terms of the pound USD, this is pushing a little bit higher, so we can target 1.27. I think we should be testing 1.27 soon. The dollar Canadian, it's dropping down. Again, if you want to get out from your trade, we could get out. That was already an easy 50 pips trade that we have here. But yeah, I think we can hold this a little bit longer. I'm not going to be holding too long on the dollar Canadian, just because the dollar Canadian has been, kind of pushing down a lot lower. And in terms of projection to the downside for the dollar Canadian, we are a little bit on the limited range here. We do get about 1.3575, about there. Yeah, just about there. Okay. So yeah, you should see a little bit of a pullback here and there. It's not a huge move. And I personally don't think the inflation number has come off significantly. I think the main driver that we see here, it's really more the retail sales. It was disappointing at 0%. But if we isolate that away and we take a look at the inflation number, it is still pretty high at 3.4%. We see a little bit of a drop, but it's not a significant drop per se. Yeah, what do I think about the results? Is it bye-bye for the US dollar? In the short term, yes, but in the long term, not quite sure at this point in time. So we'll see what happens here. Obviously, it's only been 3 minutes. In the next 2 minutes, I'll come up with the decision whether or not to actually close the trades that we have here. The dollar Canadian, I do not like the dollar Canadian at this point in time. Just looking at the movement on the dollar Canadian, I think we got filled in way too low, right? The order was supposed to be here. I got filled in about 20 pips to the downside. So I'm actually going to close the dollar Canadian. I do not like the dollar Canadian that I have here. Your case might be different. If you get filled in at a good price, then yeah, by all means, stay there. I think overnight today, we got dragged quite a little bit, right? In terms of, the place where we kept our orders and whatnot. It got filled in a little bit higher. Yeah, about 15 pips on average. I think we got filled in a little bit higher on some of this stuff here. Okay, Pound USD is obviously resisting. Not quite sure if we are gonna reach 1.27, but yeah, look, let me just give you a fair warning. This is my opinion on the reading, right? I think the only one that drives market down, the US dollar down, it's just the retail sales. We have a downward revision on the previous number, and then we have a 0% growth. That's bad, but inflation, it's still high, and I still think it's really high. It doesn't have an impact onto the long-term view of the inflation as we outlay on the market outlook. So just be very mindful on what's going on here. If you are not sure what's going on, always get out or maybe move your stop loss to break even. I think that those are going to be the better options there. It's still a very high inflation, especially the housing inflation. Yeah, if we take a look at a breakdown, it is a very high inflation. Now, retail sales, right, excluding auto, it's 0.2%. It's still a huge drop, right? If we take out auto, and gas, it's still a huge drop. So I think the retail sales number are just about right there. But the inflation, it's relatively still very high. So, we might actually have to cut our positions just in case. I think we just closed the 5 minutes time frame. We'll see what happens, but if it dips down any lower back into the range that we have here, you really want to get out from the position. So in terms of stop losses, you can move your stop loss to about, I think about here for 1.0825, below 1.0825. So we're not looking at a huge losses on the Euro USD. And for the Pound USD, you definitely want to have it below 1.26 at this point in time. That should give it a little bit of a distance there. But for the Aussie USD, this one here is all right? We can have it, we can have our stop loss at about 0.66. That's still going to be reasonably okay, but the risk reward ratio just doesn't click, right? The nearest stop loss that you can place is about 66.31. So I'm going to place my stop loss at 66.25. At least we still have a 1-to-1 risk reward ratio. The dollar Canadian, I'm already out of the dollar Canadian. I do not like the dollar Canadian. The dollar Japanese yen, I think we should be looking at more of a buy on the dip scenarios to still continue for the dollar Japanese yen. Especially we're looking at 155 here as the level where price kind of just bounces up. So yeah. In fact, I think for the dollar Japanese yen, if you're looking for a little bit of a buy for dollar yen, I think we can do that. So everything else, I'll just leave it as it is. I don't like what we're looking at. And if you're wondering, the minus is only 10 pips. So you might just move your stop loss to the levels that we already have here if you want to stay in the trade. But I'm not liking the numbers, and I don't like the initial reaction. I think we could get the opposite of this. I really think the inflation is still very high in the US, and I think we could actually still see a stronger US dollar to develop over time as well. This move is not what the market wants. No. The market wants a lower inflation rate. Again, for the US dollar to weaken, it needs to come in at 0.1% on the monthly growth. We're not looking at that. We only got 0.3%. That's basically still kind of the average that we have on the monthly rate, right? So let me just bring it up and show you what's going on here. So yeah, we're still pretty much about there in terms of the monthly rate, right? 0.4, 0.4, 0.3. We're still on that average. We're not looking at any significant changes that we have here. So just be a little bit mindful. I think we're still in for a stronger US dollar. Okay, can we reverse our trade? At this point in time, I would need to wait for the next 50 minutes. Once we have that, then yeah, we might actually want to reverse the trade on the Euro USD and the Pound USD. Pound USD is about minus 10, 13 pips down. The Euro USD is only about minus 6 pips down. So Euro USD is actually still positive. Okay. All right, let me take a look at other stuff. We'll come back to this, and I'll be sure to come back to that. Don't worry about it. I think I have a question about gold as well. If you guys are wondering what gold reaction is, I think it should actually push us up. If we take a look at the number here, this is on the other time frame. Yeah, look, I'll be honest with you. The the Kijun is still pointing to the upside. We're above the Ichimoku cloud. I think we could actually see a little bit of a push to the upside. So, yeah, for gold, as long as it stays above 23.50, then we're still okay. I'll wait for the next 5 minutes before I can actually make that conclusion. But the thing is, if in the next 15 minutes it didn't come out of this range here, then we have a problem. I think we need to get out of the trades that we have here. So the dollar index could hold 105 today. It's already below 105. I don't think this is going to be the problem. If it drops to the 104, yes, it will be a problem for the US dollar. But you know, as long as it stays around the current price level, not really too concerned. But yeah, if it does go back above 105, then we're actually going to be looking at kind of a little bit of a huge reversal on everything else, like the euro and the pound USD as well. If we have a swing long on the dollar pair, we just need to adjust our stop loss, right, to avoid the whipsaws. I would adjust it maybe in the next, after the hourly close, right? We can't adjust it now. But yeah, if you have a long position on swings, then yeah, you can adjust your positions. Look, the Kijun is catching up, right? So what I'm trying to say here is that it's going to be too early to make a call what the market reaction is. So if you're looking at a position to open tonight after the news gets released, I would say we'll wait. We'll wait for the next 4 minutes, come to the conclusion whether or not we are actually going to stay in the trades that we have here, or should we actually get out from these trades. Okay, right now trajectory still points to the right side. I just don't like how it moves just now and then how quickly it drops back down. We're already losing about 20 pips to the downside on the Euro USD from the initial reaction, and yeah, unfortunately I do get filled at a little bit of a higher price as well. So obviously depends on your condition. You might get in at a very good price. You might actually got filled at maybe about 1.0840. Then yeah, I would say move your stop loss to break even if you can, and you want to stay in the trade. But otherwise, if you don't have that, then you adjust your stop losses a little bit lower. For the Euro USD, the stop loss again would be at 1.0820 for the Euro USD. The Aussie USD is going to be 66.25. For the Pound USD, it will be at 1.26, just about 1.26. We don't want to have it too far from that. Okay, we'll take a look at. I'll leave the trades. So this trades is still running. We're still good for this one here. I don't see a lot of damage on this one, so I'm just gonna caution you I still think the inflation is high. So if you think the US dollar is actually weak, it's not quite there yet. Yeah, the retail sales is a little bit of a shock, but again, we're not looking at, you know, summer sale or anything like that, so I'm not really too concerned about retail sales. Right. Pound AUD. This is a huge drop for the pound AUD. Overall, if you take a look at the pound AUD, I'll be honest with you, I do not see this going anywhere. In all honesty, it's pretty much within that range between 1.09 to about 1.8950. So yeah, still trapped within that 50 pip range on the pound AUD. I would say I will leave it alone. I wouldn't touch the pound AUD at this point in time. Again, the data that we have just now doesn't have an immediate impact on the crosses anyway, so you know, just be mindful of this one. All right, so inflation is still hard, right? Even came as forecast. Yeah, it, as you know, as I said on the outlook, even if it comes as per consensus, even if we see a slight drop, it is still a very high inflation. And yeah, I should have prepared the slide for you guys. But yeah, if you want to look at the chart on the CPI, you should look at the weekly outlook there. Okay. What about the yen crosses? What can we do with the yen crosses? I'm actually really curious about the yen crosses. I would actually prefer a buy scenario on the yen crosses. In all honesty, I would buy in right now. The initial reaction that we have on the euro yen and the sterling yen, you're gonna look at a very long wick to the downside, and that's signal enough. And we're taking a look at, for example, on the sterling yen, for example, we're looking at 196. That's basically been the floor. We just bounces off 196. And for the euro Japanese yen, I think we bounced off one very close to 168, right? It dipped down a lot lower, but technically it never closed below 168.50 over this range. We're still good on the euro yen. The dollar Japanese yen as well, we just bounced off 155. So if you're looking at an opportunity to buy back in, I would say, you know, the trades are there. I would go with the dollar Japanese yen, the euro yen, and the sterling yen. Those three are going to be a good trade. So yeah, this one here is still picking up, and yen crosses and whatnot, we can start looking at potentially picking that up as well. Okay. So I'll jump in on the yen crosses. In terms of stop loss, this one here is actually going to be a little bit of a longer term trade. We're not looking at a very quick profit on this one here. I'm actually going to push this a little bit higher. Risk reward ratio is very good on the dollar Japanese yen, so I'm liking that. Let's see if I can add in the euro yen here. Euro yen, definitely a strong buy. We're about 15 minutes down anyway. We should already have that tail end just about there. In terms of target, we are going to target a little bit higher, about 169, just slightly off the previous high, but 169.25. Still 1-to-1 risk reward ratio on the euro yen, Japanese yen, and let's go for a sterling yen as well. Sterling yen, I like where it bounces off, and it's about 196, right? You want it to be a little bit safer. Wait for another 14 minutes if you want to. If it stays above 196, I think it's an okay price. 15 minutes wise, we already have that bounce off 15 minutes price as well, so we can pick it up if you want to. Target wise, this is not going to be a short trade. This is more of a swing trade. We are going to be looking at 197. Risk reward ratio is about 1-to-1 on the euro yen and sterling yen. But yeah, main focus for tonight is definitely the dollar pairs. So Aussie USD still good, Euro USD still good, Pound USD still good. All right, so yeah, the euro yen, sterling yen, and the dollar yen, that's going to be a little bit of a much bigger risk. So you know, just keep that in mind if you're trading those as well. How to put take profits and stop loss? You can go to your order, you can double click that, and then you can type it in here. So my stop loss, I can adjust it to 168, and then for my take profit, you know, I can be more precise at 169.25. If you already have an open position, you can actually adjust your stop loss by just, you know, clicking on it and dragging it. Depends on whether or not you trade on the computer, or is it going to be on your mobile phones? But yeah, you can drag it up and down as well. So take profit as well. You can actually adjust it. Okay. Okay, yeah, I think this is a little bit of a stalemate. I do not like the Euro USD. I do not like the Pound USD at this point in time. I'm still looking at a potentially stronger dollar. Aussie USD, I'm not too concerned because condition-wise on the inflation in Australia, we're not expecting a rate cut or anything like that coming out from the RBA. Inflation still continues to pick up in Australia. So I think Australia and the US is pretty much in the same boat at this point in time. Not too concerned about Australian dollar. I think this is pretty much stable. I still think we are going to be looking at a move towards 67 cents at this point in time. US 30 rode to 40,000. I think, yeah, we could see this one here at 40,000 for the US 30. Trajectory right now, yeah, you know, not sure if it's actually going to get there today. But yeah, 40,000 on the US 30 is going to be the main resistance to watch out for. Nasdaq, it's pretty much simple. As long as we stay above 18,000, we're still good. This one here can push a little bit higher because we're looking at about 127.2% Fibonacci extension on this one here. That would put it about 18,900 as a potential target for, sorry, not 18,900, about 18,800. About 18,800. I think we could see that move there. Okay. All right. So yeah, yen crosses again. You do not need to take yen crosses. If you want to do a little bit of a swing trade, then you can take the yen crosses. But if you just want to focus on the Euro USD and the Pound USD, you can do that. However, again, I do not like where this is kind of stalling, right? And looks like we'll see what happens. But I'm not too keen on what we have, especially on the Pound USD. The rejection is just too strong on the Pound USD, and if we go into the daily time frame, key level wise, we're looking at a little bit of potential resistance at about the Ishimoku cloud during at the current price level. So even with the Pound USD, if it could go, I think it's still going to be capped at 1.27. This is currently being at resistance 2 on the weekly pivot as well. Euro USD again today obviously is testing a little bit higher, but again, if we take a look at where what this is, and I will to zoom out, you can see that's the 1.0850, 1.09 range. So that's going to be a resistances at the current price level. Okay, Aussie USD is probably the one that's a little bit more on the stable side. I think we went past the swing high anyway, and this is what we like about the Aussie USD. We just posted a new high, that's about 66.80. So the previous swing high has been breached right now. If we have a close above that on the daily time frame, this would actually be classified as a major break of structure for Australian dollar. Okay, so yeah, that's pretty much it. Gold. Let's take a look at gold. Gold's still good. It's probably still going to push up a little bit higher. So I think we should be testing 2,400 on gold soon. Ali, we are definitely going to be looking at an extension to 127.2. That would put it at 23.90 for gold. Right? If you're thinking, oh, maybe I should buy gold, let me just give you a little bit of a perspective into where your stop loss is going to be. If you were to go in long on gold at this point in time, you're risking $15 for a $16 gain. So it is 1-to-1 risk reward ratio on gold. So be mindful. I don't think a lot of traders can actually take a $15 stop loss on gold. So make sure you adjust your position carefully. When else will I be live? I will be live next month for the NFP session. So normally when I do the English session, it's going to be the news trading session anyway. So that's going to be the NFP, CPI. Those are going to be the live sessions that I have. But if you want me to do more English session, just let Team Octa know, and maybe we can schedule something for you guys for any other days that's actually not a news release day. Okay. All right. Yeah. hanging on there. We're not looking at a lot of progress. I'll be honest with you. I think it's kind of down a little bit. Oil inventories for tonight as well. We got Kashkari's speech tonight as well in about 3-4 hours time. So yeah, just be mindful. 50 minutes, I think this is still going to continue to push up. So yeah, still a little bit more room to go to the upside for this one. Should we get in more on that? Probably not. All right. So let me just adjust this. The Euro Yen. It's there. I'm happy with the Euro Yen and the Sterling Yen and the Dollar Yen. Again, for this one here, they are not for short-term trades anyway. So just be mindful at those. Nasdaq guidelines, sure. All right, I'll go in from the daily and then we'll squeeze in a little bit lower into the small time frame. So Nasdaq, again, we're looking at a little bit of a move higher, maybe on the daily time frame. If you look at the trajectory for the daily time frame, we are looking at about 18,900, right? That's the projected movement for Nasdaq. If we take a look at it on the small time frame, on the other time frame for Nasdaq, we kind of pushed up a lot higher. Just waiting for the Ishimoku to load up first. That's good to hear. So Sandeep, I think you managed to get in and out as quickly as we can. So I think that's a good strategy. With the news releases, the ideal strategy is actually to get in and out. But obviously, it's not something that we can always do all the time. Now maybe I was taking a look at the number just now. Our retail sales was 0%. Still going to drive that in the short term. But yeah, if you manage to get in, manage to get out. If you don't, move your stop loss to break even. Leave it be. Okay. All right, let's take a look at Nasdaq. Nasdaq is still way above the Ishimoku cloud at this point in time. It is looking a little bit exhausted. However, we do have a little bit of a floor for Nasdaq. And if we take a look at the range here, I think this represents it very well. So we have a little bit of a fair value gap. That's going to be your focus for tonight for Nasdaq. As long as it doesn't dip below the fair value gap, and we have that floor at about 18,250. This fair value gap is a little bit unique because if I were to bring it back, you can see that was actually the previous resistance, and it's now the tested area for support. So I think market is probably going to have a positive run today. Intraday wise, you might see a little bit of a fluctuation here and there. I think what we can anticipate, the ideal scenario is obviously for this one to continue to 18,500 before we actually pull back down. And then it might actually come back down a little bit lower, maybe about 18,400, 18,350. It needs to stay there and potentially test this fair value gap before it can actually go to 18,900. So the move to 18,900, I don't think that's actually going to be achievable tonight, right? We are looking at a very significant gain on Nasdaq. From the current price level to 18,900, that's 500 points. I don't think, look, I'll be honest with you, with the number that we have here, I do not think we're going to be looking at a run towards, 500 points like that. But for those that didn't know with Nasdaq, on the 22nd of May, NVIDIA is actually going to release their earning calls, right? And if you don't know, NVIDIA alone kind of carries about 60 to 7% of the Nasdaq weight. So that one stock, if it does rally to the upside, it will actually carry Nasdaq, it will actually carry the S&P 500, it will actually carry the US 30 as well. However, if the earnings miss, then we're looking at a very quick collapse to the downside. Just keep that in mind. I think the main drivers for the stock market is not going to be the CPI tonight. It will be on the 22nd of May. All right. Francis, we actually have the video. I'm not sure if you can actually search through the YouTube app on mobile phones, but if you go through a computer, go to Octa Brokers channel, there's a search there in the channel. You can actually type my name in. We actually did a lot of educational sessions. In fact, we have a 15 webinars run, basically taking you from beginners to more of an intermediate, at least no longer a beginner. We cover technical analysis, we cover smart money concepts, we cover fundamentals as well. But yeah, definitely. Will Nvidia release after the market close? I believe the scheduled release is after the market close. But yeah, usually that's what Nvidia does. But just check it. Let's check it. See what the market is expecting. All right, so this is earning calls, 22nd of May. Yeah, it is going to be after market close. So key day for stock market, right? The US 30, all the other indices, you are going to be looking at a larger volatility around the 21st of May until the 23rd of May. But yeah, if you want to look at the financials, if you want to look at the earning calls and forecasts, you can take a look at it here. You can go to Trading Economics. I'm not sure if Trading Economics does have the earning calls, but you can go to the Nasdaq's website and get their projected earnings as well. But yeah, for this one here, first quarter estimate, we're looking at a little bit of an increase from earnings to 5.58. So I think it's good. Revenue, it's going to go up, targeting 24.51 billion. So I think it should be a good number. If we do get a miss though, then yeah, we might see a little bit of a problem for the stock market. Okay. All right, cool. So let's go back to this one here. I think the Euro USD trade is doing good. The Pound USD, it's okay. I'm not liking the Pound USD. I'll be honest with you. I do not like the Pound USD at this point in time. But yeah, we have our stop losses, and our stop losses is not that huge anyway. But if you already get out of it, I think that's okay. Stop loss is about, well, it's pretty big. Yeah, it's about 45 pips as well. But yeah, it is what it is. I will leave these trades. Just make sure you have your stop loss. Make sure you have your take profit. Take profit on the Pound USD. It's strictly at 1.27. The Euro USD is, take profit level. It's just another 15 pips to the upside. So, if you want to get out, feel free. I don't see any progress on this one here. But you're definitely not going to exit 1.09 for tonight. I don't think that's going to be the case for this one here. Stop loss wise on, we have that close just now. On the Euro USD stop loss, I would pretty much have it at break even, I'll be honest with you. I don't like this at all. I think this could actually come back down a little bit lower to about 1.08. So, I would prefer to get stopped out at 0 on the Euro USD. Pound USD as well, just be mindful on the Pound USD. Overall, the hourly close is okay, but the wick is still pretty long on this stuff. The Aussie USD, I'm not too I don't have a huge problem on the Aussie USD. I think this is still a steady one. The dollar Canadian, we're already out of that. If we didn't get out, we'll be in a loss on the dollar Canadian. So I think that's an okay trade. The dollar Japanese yen, I like this. Not from an intraday perspective, but I like it from a swing perspective. If we take a look at this one here, the break, we have that bounce from 155, which is a very critical psychological level. And the bounce on the 155, if we take a look at this, it's still going to be a good one. And what else? Euro yen, still a good long wick there, 168. Pretty happy with that. The sterling yen is a stronger case for this one here. We have that little bit of floor there in terms of stop loss, pretty much just about there. So I'm pretty happy with that. New Zealand USD, I don't think we have a huge problem with New Zealand USD. I think inflation is pretty much, this is going to mimic the Aussie USD. I would prefer the Aussie USD rather than the New Zealand USD, just because I trade the Aussie more than the New Zealand USD. So, if you have a trade on New Zealand USD, make sure your stop losses for New Zealand USD. Let me just illustrate that here. All right. So if you had gone in long for the New Zealand USD, you would probably have your entry somewhere about there. Your stop loss would be about 60.50. I wouldn't go any lower than 60.50 at this point in time. In terms of target level, it's very limited. I'll be honest with you. Maybe 61. That's pretty much it. You want to push it a little bit higher. We're looking at about 61.25. I think that's a little bit too far. I'll be honest with you. I'm pretty happy if we can get out of 61. It's not going to be a huge range, but yeah, it is what it is. Euro pound, sure. Let's take a look at euro pound. Euro pound, I think I'm in for a stronger euro at this point in time. I don't like how the pound has been doing. Like just now, someone was asking about pound AUD. You know, as long as it stays within the box, we're not going to be looking at any reaction. The euro pound, you know, if you are thinking on going long on the euro pound, you know, I'm okay with that. But the risk here is not huge at all, right? It's probably about 20 pips. But this is not a euro pound, where everything is pretty much doubled, right? And in terms of projection, in terms of how far it can go. On the early time frame, we're pretty much limited at about 8607, about there. Not even 8610, but yeah, if you want to target 8610, you can do that. It's not gonna give you a. Yeah, I'll look at euro pound as reference, but in terms of me trading it, it's super choppy, right? And the range is pretty small. If you're okay risking, you know, 18, 15 pips, then it's okay. As long as you don't have your stop loss any lower than that low there for today, that's completely fine. But if we take a look at how it's going, just to give you a little bit of a fair warning, the euro pound is actually in a downward trajectory. So if we see that buy, you know, I'm not really expecting 86.10. I'll be honest with you, I'm probably expecting that this here is actually going to be traded within this range. So just judging by that, if we go for target at, you know, close to 86, I'll be happy with 86. That's not going to give me a 1-to-1 risk reward ratio. I'm not too keen on that. No, this is TradingView as charting. This is MT5. I do have the. Hold on. Let's see if I can. See if I can show you the. Let's see. No. See if I can sign in and show you the trading platform. This is the trading platform, right? So it is available. If you want to use the Octa trading platform, you can use it. But yeah, this is a web platform, so you can actually access it from a tablet as well. TradingView is being used as the chart here, so I think, yeah, it gives you a good usability. And in terms of how to navigate that, it's still pretty much there. I like the space. Because it does give you a little bit of trading ideas. If you need some trading ideas, if you're trying to figure out, you know, what are the markets trading, you know, you can take a look at the space here. It does give you several references onto the majors as well, right? Which is, I think, a good thing. Okay. How many subscribers do I have to avoid inconveniences? I don't know. How many subscribers do you see on Octa Broker? All right. Cool. Okay, so that's pretty much it for today. I will leave the trades that we have here. All the targets are there. If you want to screenshot it if you want to. Again, as a reminder, Euro yen, sterling yen, dollar yen, those are going to be a little bit for the longer term trades, and they do carry a much bigger risk profile. So just keep that in mind if you're trading the yen crosses. They're a little bit more on the volatile side. But everything else, you know, for the Euro USD, I would move my stop loss to break even if you want to stay in the position that we have here. Not really expecting too much for out of the Euro USD and Pound USD at this point in time. All right. Okay. Think that's pretty much it for this week. Last one, Aussie Canadian. Okay, we'll take a look at the Aussie Canadian as the last one for tonight, and then we're gonna wrap it up for tonight. Aussie Canadian, I'm pro a stronger Australian dollar. Look, I'll be honest with you. I think Canadian and Australian dollar, they're actually pretty stable. They're strong. Canadian right now, it is a little bit more on the choppy side, so just be very mindful on what the Canadian does. I think the Bank of Canada is still scheduled for a rate cut. The RBA doesn't, so I think Aussie Canadian, we're still pointing to the upside at the very least at this point in time. And we just clear off a huge hurdle as well. I think we cleared off this range here on the Aussie Canadian. So yeah, I think the Aussie is going to be the stronger currency. Obviously, you might want to wait for today if it does come above. But daily above 90.50, I would say that that's going to be a win for the Australian dollar against the Canadian dollar. Projection wise for the Aussie Canadian, you can go for the daily time frame. You're going to be looking at a potential return towards 91 cents, 91.50, about 91.50 on the dollar Canadian, Aussie Canadian. All right. All right, cool. Let's wrap it up for tonight. Good luck for trades, and I don't get to see you until the NFP next month, which is going to be the first Friday of June. So yeah, good luck with the trades for the next 2 weeks, and I'll see you in the month of June.